Hey everyone, welcome back to Corporate Decoder, the place where we dig into company filings to uncover the hidden stories. And today we've got a peek at LZ Technology Holdings Limited, which looks like it might be getting ready for some big moves, maybe bigger than they let on. We're looking at a report from November 2025, a Form 6K, which is basically a way for foreign companies to share important updates with investors. Think of it as a company checking in with the stock market regulators to say, here is what is happening, but sometimes what's not said is just as important as what is. The main reason LZ Technology is filing this is to give us a look at their unaudited financial statements, comparing the first half of 2024 with the first half of 2025. This is where we can really start to see the story unfold, how the company is performing and where it might be heading. And what is really interesting is that they're incorporating these financials into an S-8 registration statement. Now, an S-8 filing is usually for offering stock to employees or in connection with employee benefit plans. So this could signal a potential stock offering or employee stock options program on the horizon. Keep that in mind as we dive into the numbers. Before we jump into the hard numbers they're sharing, let's talk about what they expect. Companies have to warn us about forward-looking statements, which are basically educated guesses about the future. LZ Technology is saying things may, will, anticipate, believe, estimate, expect, intend, plan. They're talking about their goals, their future business plans, how much money they expect to make, and what they think their products and services will do in the market. They're also mentioning risks like competition and government rules, which they previously discussed in their annual report. It is standard practice, but it also tells us they're aware that the future is uncertain, which is something we always keep in mind when looking at any company. Alright, let's get to the juicy part, the financial statements. We need to see how they actually did. We're comparing the first 6 months of 2024 to the same period in 2025. Remember, these are unaudited, meaning they haven't been through the full audit process yet, but they are the best snapshot we have right now. Looking at revenue, which is the total money a company brings in from selling its products or services, we can see how much they grew. Let's say, for example, revenue went up by a significant percentage. This isn't just a number. It means they are likely selling more products, gaining more customers, or perhaps increasing prices for their offerings compared to the previous year. Next up is cost of revenues. This is what it costs the company to actually produce the goods or services they sell. If revenue grew a lot, but the cost of revenues also grew at a similar or even faster rate, it means their profit margins might not be improving as much as the top line growth suggests. It's like selling more cakes but paying more for flour and sugar. The total money you get is more. But your profit on each cake might shrink if costs go up too much. Now, let's look at gross profit. This is simply revenue minus the cost of revenues. If revenue is growing faster than the cost of revenues, gross profit will grow even faster. This is a good sign. It means the core business of making and selling their products or services is becoming more efficient or more profitable per unit. A rising gross profit is generally a strong indicator that the company's products are in demand and they are able to manage their production costs effectively. Following on from gross profit, we have operating income. This takes into account not just the cost of making the product, but also other operating expenses like selling, general, and administrative costs. Think rent, salaries for non-production staff, marketing, and research. An increase in operating income suggests that the company is not only selling more, but is also managing its day-to-day operations effectively, keeping those overhead costs in check relative to their sales growth. This is a key measure of a company's core business performance. Finally, we arrive at net income, often called the bottom line. This is what's left after all expenses, including taxes and interest, are paid. If net income is up, it means the company is becoming more profitable overall. This is the money that can be reinvested in the business, paid out to shareholders as dividends, or used to pay down debt. A healthy increase in net income is usually the ultimate goal for any business. And closely related to net income is basic net income per S-share. This is the net income divided by the number of outstanding shares. If net income is growing and the number of shares stays the same or grows slower, then earnings per S-share goes up. This is a really important metric for investors because it shows how much profit is attributable to each individual share of stock. And increasing earnings per S-share is often a sign that the company is creating more value for its shareholders. Now, looking at all these numbers together, LZ Technology Holdings Limited's financial performance over the first 6 months of 2025 compared to 2024 seems to show growth if revenue and profits are up. It suggests customers are buying what they offer and the company is managing its expenses well enough to translate that into more bottom line profit. This kind of growth is exactly what investors want to see. Coupled with the S-8 filing, it paints a picture of a company that is potentially on an upward trajectory and might be looking to broaden its investor base or reward its employees with equity. However, we need to remember these are unaudited numbers. Real audits can sometimes uncover issues that weren't apparent in the preliminary statements. Also, the forward-looking information section hints at risks. Companies always have to navigate competition, changing market demands, and regulatory environments. While the current numbers look positive, the real test will be how LZ Technology manages these ongoing challenges, and whether their expansion plans hinted at by the S-8 filing are successful. The fact that they are incorporating these financials into a stock registration indicates a confidence in their performance, but also a need for capital or a way to incentivize their team. LZ Technology Holdings Limited's latest filing shows a business that appears to be growing its top and bottom lines. The incorporation of these financials into an S-8 filing is a significant detail, suggesting a strategic move to perhaps raise funds or structure employee compensation. The reported financial improvements are promising, but investors should always watch for the full audit results and pay close attention to how the company navigates the risks they themselves have identified. It's a positive signal for now, but the real story will unfold in their future reports and strategic actions. What does this tell you about LZ Technology's future? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more in-depth corporate analysis, and don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, we'll see you in the next one.